Hello, and welcome to our next NEP. NEP stands for Nonprofit Auditor Points, and I'm Irina Oreshkova, your nonprofit auditor. And today I would like to talk about adjusting journal entries. What do I mean by adjusting journal entries? When you're using your accounting system and recording invoices, you pay bills, these are not adjusting entries. Adjusting entries when you debit and credit something without any external documentation, but rather than because you're applying some sort of reconciliation or schedules. Where do we as accountants use adjustments? Typically, we use them at the end of the year as the book closing process. We record depreciation expense. This is purely adjusting entry when we record depreciation and accumulated depreciation. We use adjusting entries when we write off bad receivables. We know we're not going to receive receivables, so we decreasing receivable and writing bad expense. We record adjustments when we are allocating net assets with donor restrictions, without donor restrictions. We record adjustments when we adjusting our prepaids at the end of the year, or when we record accrued expenses or accrued payroll, and so forth. All these adjustments are fully justified, and we as an accountants, we understand the adjusting process that we need to do to bring our books on accrual method of accounting versus cash. Because every transaction when we record typically via bill or invoices, they are typically based on the movement of the cash and normal operating process. And then at the end of the period, we need to record number of adjusting entries to bring your books to proper accrual method of accounting in accordance with GAAP. In some instances, we as the auditors see that nonprofits use excessive use of adjusting entries. And that's not a good system of controls and not a good policy. Why? Adjusting journal entries, as I mentioned before, they typically do not have a good support, external support, like invoice, bill, contract. They're based on some sort of schedule, estimates, and some assumptions. It makes this very challenging to review and requires extra steps of approval, understanding, and careful consideration before any adjustment is recorded. So if it's done at the end of the month or at the end of the year based on specific schedule, it's completely acceptable. However, if your nonprofits or your bookkeeper get so comfortable with adjustments, and every time when something needs to be changed, adjusting journal entries recorded, it makes books convoluted, not easily reviewed, understand, or auditable. For example, we see sometimes that bookkeeper would record $100,000 in earned revenue, and later that will be removed from that account and moved to grant revenue, and later the same amount will be removed and moved to net assets account. And when I'm saying removed, everything done via AG, meaning adjusting journal entry. Bookkeeper will go to QuickBooks or your accounting system and record debit one account, credit another account, again debit another, and if it's done 4 or 5 times, the audit trail, it becomes so convoluted. It's really hard to trace where the funds eventually end up, especially sometimes if we see it was debited one account, credited another account for $100,000. Later, it was split 50-50. $50,000 went to another account, and then it went to different account. And from there, it's also gets split. And only bookkeeper understand how the amounts were split, why they were split, in which revenue account it's end up. It's the most challenging time when bookkeeper, after it was booked to revenue, removed to revenue, then again booked and removed, eventually get moved to balance sheet account and allocated there and again moved to revenue. Based on my experience, this is recipe for disaster and mistakes. Your nonprofit should have a policy to record adjustments only if they understood, approve, and typically recurring typical adjustments. If the adjustment entries are not typical, they should be avoided. And if they truly need to be corrected and adjusted, we highly recommend either going through the process and document very detailed why the adjustment was recorded. If it's truly a mistake and there is no, in the same period, there is no need to do adjusting journal entry. It could be done via just correction of your initial entry. Sometimes we as an auditor, it takes us a long time to understand what was done in order to trace your entries. And we find mistakes. And then we understand why management cannot find the mistake, because it was so convoluted. Bookkeeper records so many adjustments that we cannot get to the end why was recorded what was recorded. Therefore, if you management or you board of directors simplify the process, there is absolutely no need for nonprofit to have 3-4 steps of the same revenue to be moved from one account to another account to another account to another account. Again, this is a recipe for disaster. Most problems we see that relates to to recording restricted revenue. And if your bookkeeper does it, we highly recommend to sit down and simplify the process to see how revenue can be recorded more straightforward so everybody can understand movement of the revenue, and it could be reviewed by the management and by the board. Another common area where we see sometimes adjustments are used in the receivable. And if receivables is recorded via adjustments, again, that related to revenue, it also can be recipe for the disaster. Make sure that revenue come either from grant or from earned revenue without any adjustments. And even at the end of the period, when you're writing off some receivables or you billing additional receivables, it's supported and it's proper documented, and hopefully it's not done via adjusting journal entry. Every revenue should be linked to the customer, to a donor, because the simple receivable, it should be assigned to a donor or customer and needs to be proper recorded and also maintained so the management can continue following up on that receivable. To summarize, I want to make sure that nonprofits used adjusting journal entries carefully with enough documentation, and also only periodically, typically at the end of the period, at the end of the year, and it's not common process for correction of the mistakes or constant allocation of some procedures that bookkeeper believe this is the proper way to do it. QuickBooks or any other accounting system has ability to record adjusting journal entries, but they are adjusting, meaning that they're adjustments. They're rare and they have to be unique. They cannot be your normal way of recording transactions. Thank you so much. Hopefully it was useful. Let's continue using GAAP correctly, and looking forward to see you for the next nap. Talk to you soon.